Welcome to The Explainer. Today, we're unpacking a really powerful idea from the legendary investor George Soros. And I mean, this concept is so big, it doesn't just explain financial markets, it might actually change how you see reality itself. You see, Soros's core philosophy, it goes way beyond just simple trading strategies. He came up with a whole new way of looking at things, a new lens for understanding that chaotic dance between what we believe is happening and what's actually happening. And this slide right here gets to the heart of the split. Most financial theory says markets are basically like a mirror. They just passively reflect a company's real, fundamental value. But Soros saw something totally different. He argued they're much more like an artist's brush, actively shaping, painting, and sometimes totally distorting that value.
So to really get what he's talking about, we first have to understand the conventional theory he was so determined to, well, shatter.
The traditional view, the one you learn in textbooks, is built on this idea that markets are these perfect, rational, calculating machines. In that world, the price you see is always the right price. There's no room for bubbles, no manias, just pure, cold logic. But Soros looked at all that and basically said, hold on, you're missing the single most important variable of all. And that variable? It's us, people. He argued that markets aren't these cold, rational machines because they are driven by biased, emotional, and fundamentally flawed people whose very actions change the game they're playing. And that single, critical insight led him to his master theory, this concept that explains the wild, spiraling dance between our own minds and the market. Okay, let's really dig into this word, reflexivity. It sounds kind of academic, but the idea is actually pretty simple. It's a cause and effect loop that runs in both directions at the same time. What we think changes the market, and then how the market changes, well, that changes what we think. And this loop can spiral into these massive booms and, of course, devastating busts. So he breaks this loop down into two main parts. First, you've got the cognitive function. That's just a fancy way of saying what we think about the market. You know, the story we tell ourselves. And second, you have the participating function. That's what we do about it. We buy, we sell, we act on that story. And this is where the magic, or sometimes the madness, really happens. This is how those two functions start feeding each other. It all starts with a simple belief. Hey, that stock is cheap. That belief leads to an action. People start buying. That action changes reality. The stock price goes up. And that new reality, the higher price, then reinforces the original belief, which pulls in even more buyers. It's a powerful cycle that can totally detach from what the company is actually doing. Now, theory is one thing, but let's look at a real-world example of how Soros used this very idea to make an absolute fortune. So picture it, the 1980s. The market is roaring, and Soros looks at this incredible Reagan-era boom, and he sees something much deeper than just a strong economy. He sees a self-reinforcing story that an entire country was buying into, one that was creating its own economic reality. He gave it a name, the Imperial Circle. And here's how that loop worked. It all started with a belief, a narrative. America is a strong empire again. This belief justified certain actions, like huge government spending. Now, that spending had an effect. Interest rates had to go up to attract money to fund it. This, in turn, reinforced the story, because foreign money came flooding in to get those high rates, which made the US dollar incredibly strong. And the final outcome? A strong dollar fueled a massive bull market, which seemed to prove that the original belief was right all along. It was a perfect, self-fulfilling prophecy. But, and this is the absolute genius part, Soros knew these loops can't last forever. He understood that perception can only get so far away from fundamental reality before it snaps back hard. They are unstable because eventually the trend starts attracting people who don't even understand the story anymore. They're just chasing the price. So Soros was always riding the trend, but at the same time, he was searching for that hidden flaw, that one little crack that would cause the whole thing to reverse. So what's the ultimate lesson in all this for the rest of us? Well, it's not just a market theory, it's a whole different way of thinking about the world. You know, the single most important lesson from Soros might not even be reflexivity itself. It's the principle that makes it all possible, fallibility. It means we have to start from one basic premise. Our picture of reality is always imperfect, always a little bit wrong. The second you think you've got it all figured out is the exact moment you are the most vulnerable. And this leads to a mindset built on 3 pillars. First, you have to acknowledge your own biases. Second, and this is huge, don't look for evidence that you're right. You have to actively hunt for the evidence that proves you are wrong. And third, be ready to completely abandon your ideas and pivot the second the facts change. See, a great trader isn't the one who's always right. It's the one who recognizes they're wrong the fastest. So this all gives us a kind of playbook for how to start thinking like Soros. First, what's the story that everybody believes right now? What's the prevailing bias? Second, how is that story feeding on itself to change what's actually happening? And finally, you can ride that trend, sure, but you must always be mapping its flaws, constantly asking yourself, what is the fundamental truth this story is ignoring that will eventually break the whole loop? Ultimately, Soros's alchemy is a profound challenge. It pushes us to be more than just humble. It forces us to question our own thinking constantly. The real work, the real tightrope walk for any investor is learning to tell the difference between a trend that is actively creating a new reality and